Okay, let's go.
All right, let's talk about something absolutely crucial. Having a great trading strategy is how you make money, but having a solid money and risk management plan, that's how you survive long enough to actually make that money. Today, we're digging into the game plan that really separates the pros from the amateurs.
I mean, this is the question, isn't it? It's the one that keeps traders up at night. How do you stay in the game long enough to win when the risk of blowing up your account is so real? Well, today, we're going to build a framework to make sure that just doesn't happen to you.
So here's our game plan for today. We'll start with the two main goals every trader has. Then we'll hammer home rule number 1, survive. After that, we'll get practical and talk about calculating your risk. Then we'll switch gears to rule number 2, thrive. And finally, we'll get into managing trades when they're actually live. Let's do it.
Okay, first things first. To really make it in trading, you have to be good at two totally different things. Honestly, think of it like a sport. You can't win with just a great offense. You need an incredible defense too. So let's break that down. Your defense, that's your money management. It's all about protecting your capital, deciding how much of your total account you're willing to put on the line for any single trade. Then you've got your offense, and that's your risk management. This is where you decide where to put your stop loss, where to take your profit, basically how to make the most of a winning trade. But here's the absolute key. You can't play offense if your defense has let you get knocked out of the game. Survival always comes first. So let's really focus on that number 1 rule, survival. Look, your trading capital is your lifeblood. It's the only tool you have in this business. Without it, you're done. So protecting it isn't just some nice idea. It is job number 1, period. Let's run a little thought experiment. Let's say you decide to risk 5% of your account on every trade you take. On the surface, it sounds kind of exciting, right? Bigger risk, bigger reward. But what happens when a losing streak hits? Just look how fast the damage happens. After only 5 losses in a row, and trust me, every single trader has losing streaks like this, you've already wiped out a quarter of your entire account. That is a massive hole to climb out of, not just financially, but mentally. Okay, now let's hit the rewind button. This time, we're going to approach this with a proper defensive mindset. We're only going to risk a disciplined, professional 2% on each trade. So how does that change things? Well, look at that. With this much smaller risk, the exact same 5-trade losing streak only results in a 10% drawdown. Now, don't get me wrong, it still doesn't feel good, but it's a totally manageable loss. You can bounce back from that. This right here is the secret to longevity in trading.
And this really nails it. You see, blowing up an account isn't just about the balance hitting zero. The real damage, the psychological damage, happens way before that. Once you lose 50% of your capital, your confidence is shattered. You start making bad decisions out of fear or desperation. You're mentally out of the game. So how do you avoid that nightmare scenario? Simple. For anyone starting out or anyone with a smaller account, the sweet spot is right here. 2 to 3% risk per trade. It's just enough that your wins feel meaningful, but it's small enough that a string of losses won't crush you.
Okay, so we've got our magic number, our percentage. But how do you actually apply that to a real live trade with total precision? Well, this is where we stop guessing and start acting like pros, using a tool that is absolutely non-negotiable.
Using a position size calculator is so easy. You just plug in the numbers. You pick your currency pair, let's say GBP/CAD. You put in your account size, say $2,500, and your risk, which we've decided is 2%. Then you figure out your stop loss distance, in this case 20 pips, which are just tiny price movements. You hit calculate, and bam! It tells you the exact position size to use, 0.33 lots. You do this every single time. No emotion, no guesswork, just pure math.
All right, our defense is rock solid. We've built a fortress around our capital. Now, for the fun part. Let's switch to offense. How do we take that strong foundation and use it to not just survive, but to really, truly thrive? This is such a clever strategy for growing aggressively without the stress. Here's how it works. When you land a big win in your main account, your account A, you immediately transfer a chunk of those profits into a totally separate account B. Now, this second account becomes your offense account. You can use it to try out riskier strategies because you know deep down that it's funded entirely with house money. Your original core capital is safe and sound over an account A.
And here's a quick pro tip that's more about psychology than anything else. You have to remember to pay yourself. Trading can feel like this endless, abstract video game. To keep yourself motivated for the long haul, make it a point to withdraw some of your profits every month and actually enjoy them. It makes your success feel real, and it reminds you why you're putting in all this work.
So far, we've covered all the planning you do before you enter a trade. But what about when you're in the thick of it, when a trade is live? Now we're getting into the advanced techniques for managing those open positions and squeezing every last drop of profit out of them. A timeless classic is the break-even strategy. It's simple. Once a trade moves in your favor by a decent amount, say twice what you risked, you do two things. First, you lock in some profit by closing half of your position. Second, you move your stop loss on the remaining half right up to your entry price. And just like that, you now have a completely risk-free trade. You can just let it run, totally pressure-free. Now, if you want to take that idea even further, you can use what's called a trailing stop. Think of it as a smart stop loss. It doesn't just sit in one place. It actually follows the price as it moves in your favor, locking in more and more of your gains automatically, all while giving the trade room to breathe.
You can do this manually, and it's actually pretty simple. So if you're in an uptrend, you wait for the price to make a new high. Then, when it pulls back and forms a little dip, a new swing low, you just slide your stop loss up to right below that dip. Then you just repeat that process over and over. You're basically riding the trend for all it's worth.
And that's really the holy grail, isn't it? This technique lets you stay in those huge, trend-following trades that can give you these insane returns, but you can do it without that constant fear in the back of your mind that the market's going to turn around and snatch back all your hard-earned gains.
So there you have it, the complete trader's game plan. A tough-as-nails defense to protect what's yours, and a smart, calculated offense to grow your account safely. You have the tools, you have the strategies, so the only real question left is, what's your personal game plan going to look like?